Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings, and today we've got a company tweaking its loan details. Is it a sign of distress or smart money moves? Let's find out. We're looking at an 8K report filed by New Mountain Guardian IV BDC. L.L.C now, an 8K is like a company's immediate news bulletin to the public, reporting significant events that shareholders should know about right away. Think of it as the company shouting out an important update from the mountaintop. So, who is New Mountain Guardian IV BDC LLC? They're a business development company, or BDC in really simple terms. BDCs are companies that invest in small to medium-sized businesses, often providing them with loans and equity. They're like private bankers for companies that might not be big enough for traditional big bank loans or public stock markets. This particular one, New Mountain Guardian IV BDC LLC, is registered in Delaware and gets its income. The main news here, the core of this report, is about a change to a loan agreement. Specifically, it is the third amendment to something called a loan and security agreement. Think of it as renegotiating the terms of a big loan. This agreement is part of what they call the UBS credit facility. Now, what did they change? The most significant updates are to the timeline of this credit facility. They've extended something called the revolving period end date. Basically, this is the period during which the company can borrow money under this facility. They've pushed this end date from January 2027 all the way to November 2028. That is an extra almost 2 years to be able to draw on these funds. They also extended the facility maturity date. This is the final date by which all the money borrowed under this facility needs to be paid back. They've moved this from January 2029 to November 2030. So they bought themselves more time both to use the credit line and to pay it back. This is a pretty substantial extension of 2 years for both dates. This extension falls under the category of creating a new financial obligation, or at least modifying an existing one. Since they're extending the terms of a loan facility, it is a direct financial obligation. They're not hiding this. They're informing everyone about this change in their borrowing arrangements. Interestingly, when you look at what securities are registered on major exchanges, it says NIA. This means their primary securities aren't listed on big stock exchanges like the NYSE or NASDAQ. This is quite common for investment vehicles like BDCs, which often have more private or specialized financing structures. And it is confirmed they are an emerging growth company. This is a classification that allows newer companies to have some regulatory flexibility, especially concerning financial reporting. They get to use simplified accounting rules for a while. So why is this change to a loan agreement so important that it warrants an 8K filing? It signifies a material change in their financial structure and their access to capital for a company like New Mountain Guardian IV BDC LLC, which is in the business of lending and investing. Their ability to access funds through credit facilities is absolutely critical to their operations. Extending these dates suggests they anticipate needing this credit line for a longer period, or perhaps they're securing more favorable terms by agreeing to a longer commitment. Think about it this way: if you have a credit card and you extend its validity for another 2 years, it means you plan to keep using it. For a BDC, this UBS credit facility seems to be a vital part of their engine, allowing them to make new investments or support existing ones. The extension might mean they see good investment opportunities on the horizon that will require this funding. Or it could be a proactive move to ensure stability and funding availability in potentially uncertain economic times. It is also worth noting that they use the phrase, "all other terms of the loan agreement shall remain in full force and effect." This implies that while the duration has changed, the core rules, interest rates, covenants, and other vital aspects of the loan likely remain the same. They're not fundamentally altering the deal, just the time frame. Now, typically when these important agreements are amended, the actual document itself is filed as an exhibit. Here, it says the third amendment will be filed as an exhibit to their upcoming quarterly report on Form 10Q. So, the detailed text of the amendment isn't in this 8, but it is promised for a future filing. This is common practice, especially if the full document is quite lengthy. And finally, we have the signature. This is the formal sign-off confirming that the company is officially submitting this report. It is signed by Eric Kane, who holds the title of Corporate Secretary. This ensures that the filing is properly authorized by the company. Looking at this filing, it's not about massive profits or losses. It's not about booming revenue or a sudden drop. It's about the plumbing, it's about the underlying financial infrastructure that allows a company like New Mountain Guardian IV BDC LLC to do its business. By extending their credit facility, they are signaling a longer term operational outlook and the continued importance of this funding source. Is this a sign of strength or weakness? On the surface, it looks like a strategic move to secure predictable funding. Companies that are confident in their future prospects will often lock in favorable credit terms. However, The flip side is that if a company has to extend its borrowing period, it could imply that they aren't generating enough cash flow from their investments to repay the loans within the original timeframe. Without seeing the detailed financials of their actual investments and their performance, it's hard to say definitively, but the fact that they're securing longer term access to funds from a reputable institution like UBS suggests a degree of confidence from the lender in New Mountain Guardian IFV BDC's ability to manage its obligations. The key risk here is if their underlying investments don't perform as expected. The extended repayment period just kicks the can down the road. Alright, that is our breakdown of New Mountain Guardian IV BDC's latest filing. What is your take on these loan extensions and what they might signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.